We are seeing a massive shift in the market where smart money is rotating into different sectors to protect the capital and to grow consistently in very shaky market conditions with war, different oil prices constantly, and having to consistently adapt to what's coming next with the AI. We're seeing record valuations for IPO of SpaceX, IPO of OpenAI, and smart money is consistently looking to transfer that into safe opportunities. We're going to cover 3 stocks today in the AI defense sector to cover your losses that you've seen probably in tech and in SaaS, because there's a lot of people who are in those companies and they're feeling the pain. So we need to make back some money without revenge trading, and I'm going to discuss those 3 companies today. If you like the video thus far, make sure to subscribe and click the like button. It shows that the algorithm that you actually enjoyed the video, and it should push up the video to more people. So I'd really appreciate it. But with that being said, let's go ahead and jump into it. The first company is Arrow Environmental. So let's go ahead and look at that. Okay, so as you can see here, Arrow Environmental unveils Locust X3 third generation modular directed energy weapon system. So what is this company all about? And especially with the war in Ukraine and what's happening right now with the war between the US and Iran, we're seeing a massive surge in autonomous technical devices, vehicles, substantially drones, as well as small munitions carried by these drones being dropped. So Arrow Environmental is a leading company in the space and works directly with the US government with big contracts. This allows you to actually profit off of war, which I hate to say, but it's just the way things are, especially when SaaS is experiencing a major decline. You can see this company is developing a lot of the products that are actually being utilized today. Lots and lots of sales are going in, lots of sales and research are going into these companies and being able to actually boost your portfolio when things are low. Let's go ahead and look at the stock here. So you can see here as of April 2nd, which was a Thursday closing, the last price was $184. The 52-week range was between 102 to 417. So you can see a lot of fluctuation in this company. Market cap was $9.3 billion, and year to date, it declined about 28%. Now, the reason I think this is such a fantastic time to purchase this stock is because of all the expansion of war in the Middle East and in Eastern Europe. Now, a big drawback with this company, I'm going to be honest with you guys, is contract issues. So the reason why there's a lot of pitfalls is because in the defense space, if you lose a substantial contract with the US government or another government or just a really big contract with a private industry, that's a big chunk of your revenue. And you don't know when those partners would pull out. So that is a big thing. But profitability, this company is managing a recent negative earnings per share of around negative 4.3 TTM. So in general, this right here is one that I'm definitely purchasing. And it is one that to prevent the downside of just having all your portfolio mainly, or to have the majority of your portfolio mainly leveraged towards tech and SaaS, it's really meant to even out that. So you can see here lots and lots of volatility in the stock, but overall a great company with great momentum. All right, so now we're going to go over to the second company, which is one of my favorites, and it is Microsoft. Wow, this company's been getting absolutely destroyed, and it's gone down to almost where it was last year during the tariff tantrum. And so let's dive into that and see what the heck is going on with Microsoft. Because if your portfolio is mainly in these tech stocks and SaaS companies, then this is such a good one to really consider getting into. Okay, so over the past year, you can see it's dipped below where it was last year around the tariff crash here around April 7th, April 8th. So, I mean, absolutely crazy. And Microsoft, if you aren't aware, is a really big leader in the space, providing the US military with cloud, with cloud storage, with AI infrastructures, data centers, as well as they're also partnered with Palantir and some of the other biggest leading partners in the space. So overall, they're integrated. And from what I've seen when companies get that integrated within the top players and the government contracts, it's very hard to get rid of them. It becomes a sticky business model. This is why I personally believe Microsoft is a fantastic buy right now. Not as much consistent upward growth over the past 6 months. As you can see, it's been on a sharp decline. And I think we've set up a very, very solid support level here. So you can see it broke through the support and it went back up as it became the new resistance. And now it's sitting at the exact support level from 2024 in January and also April of 2025. They've done great on their earnings over the past 2 years. As you can see, beating earnings and expectations. And overall, their statements are looking very, very good. So overall, total assets, 636 billion, and total liabilities about 237 billion. So about 363 billion in equity. So I think on a company like this that's declining that sharply, there's nothing fundamentally wrong with a good company with a good balance sheet. Let's look at the income, also doing really good, 81.7 billion, gross profit around 55.3 billion, and then operating income around 38.7 billion, leaving a net income of 38 billion. So, I mean, they're essentially doing like $2 to $3 billion every single month in profit. No, that'd be like 3 to 3.5 billion every month. So in general, I think this is an absolute buy, and I am buying very heavy on this, even though my positions are a little bit red since I was buying on the way up as well as last year. But in my opinion, this is a fantastic position to really anchor in over the next few months as well. We might be sliding into just a slow decline in the market with a lot more of these spaces until we hit a really big bottom. And no one knows when the bottom is going to be. But I do know that as long as you own good companies like Microsoft, you're able to rebound because the market's going to come back. It's not like this is the end of the world. And as you can see, stocks always have volatility like this. So that's my opinion on Microsoft. Let's move on to the next one is Leidos Holdings that we have to talk about. And it is a big player within the space. And it's a fantastic position. So here's the reason why. And it also is one of the top 10 defense companies within the sector, which is really important. I believe it's number 8 on the list. The reason why it's important is because it's harder to get rid of contracts with these good, sticky businesses that are used to having good dealings with the US government. And this is why I think as we have more conflicts ramp up, we could have a potential conflict with Taiwan, potentially more invasions of countries within Eastern Europe, and a conflict with NATO. I think we're going to need more supply of these drones, even if we don't use them, just for actual research purposes and basically selling them to other countries. So this is a position that I think is a really, really good one to look at. So let's pop over here to the stock and take a look. It's been doing really good with a really solid run up. As you can see here, peaked all the way up to 207 and then came down to 131. So a lot of volatility on this position in the defense sector, but some really, really good growth over the past few years. On their earnings, let's check out their past earnings here. So they had a negative 96.45 million, so about 2.2%, which isn't the best, but they surprised earnings up here with 5.8%. In general, in the space, there's lots of technical advances that have to be made, and that's a very common thing. But in general, this is still a fantastic position. Let's go ahead and look at the statements and the balance sheet. So as you can see, lots of spending, as I said, in the space, but 13.5 billion in assets and 8.59 billion in total liabilities. So total, they still have 5 billion in equities just about. So very solid with cash flow, just a lot of expenditures, which is fair. Like there's a lot of development in the actual development of these drones and tech, and also in the AI space, which we're seeing a lot of the biggest players, Google, Amazon, Microsoft, having to put lots of CapEx, Meta as well. Okay, let's look through the statements and the income. Let's see, income was down a little bit here. Not the biggest deal. It was down like 3.6%, but in general, gross profit went up, operating income, and then they had net income of 327 million. So what we're seeing here is it's not a massive deal if they had a little bit less of a total revenue situation, because they actually managed to squeeze more profit out of what they had and giving more lifetime value to their customers. So I'm not necessarily too worried about that. And I think that could be a big reason why there was, if we go back to the chart here, if we look at December of right here, so you can see there has been a little bit of a drop off since then, but no company is perfect. And this even creates more of a value gap, because once we see the stock run up again after the next earnings, which is coming up shortly, we pull it up here. So that's coming up shortly, and we could see a run up on the stock to correct itself a little bit, but also give a good value opportunity for the buyers. So these are my 3 positions in the AI defense sector that I am purchasing right now, and you should consider purchasing as well. Obviously, this isn't financial advice, so make sure to do your own research on the companies. And just one more thing before we go is understanding that a company that has good fundamentals and a good direction and where it's going is so much more important than just looking at the charts and analyzing where you think it's going to go, because the fundamentals behind the company actually dictate where it's going. So if you guys want to know exactly what's happening with my portfolio and the trades I'm doing, make sure to click the link down below, book a call with my team and see if you qualify to work with us. But with that being said, we will see you guys on the next video. Peace out, guys.